Hello and welcome to the Deep Dive. This is where we sift through the key stories from the financial pages of the Seoul Economic Daily that you might have missed in your busy week. We go beyond the headlines to really dig into what the numbers are telling us about our economy, and we have some really hot button issues on the table today. We'll cover everything from the political dilemma surrounding potential car insurance hikes by industry leader Samsung Fire and Marine to the painful process savings banks are going through to clean up their bad loans. We'll also expose how an illegal Chinese affiliated crypto exchange is putting local investors at risk. And we'll end on a more positive note, looking at an innovative stablecoin project from NH Nongmat Bank and what it signals for the future of fintech. So let's start with our first topic, which could send ripples through the entire financial industry. The number one insurer, Samsung Fire Marine, is officially considering raising its auto insurance premiums next year. This is more than just a price change. It's being seen as a kind of political test, clashing with the government's focus on price stability. So could you set the stage for us here?
Of course. The bottom line is that the profit structure for non-life insurers it's really reached a breaking point. You have to remember, Samsung Fire and Marine has been steadily lowering its premiums for 4 straight years.
Right.
But this year, their loss ratio has just exploded. In the third quarter alone, their auto insurance division posted a huge deficit of 64.8 billion won. The cumulative loss for the year is now 34.1 billion won. They're at a point where they have to consider a hike.
The loss ratio, the percentage of premiums paid out as claims. How serious is that number really? Can you give us some context to understand the scale of it?
It's extremely serious.
Yeah.
In September, the auto insurance loss ratio for major insurers topped 94%.
94.
Yes, 94. That's the highest it's been since they started tracking this data back in 2020. I mean, in the insurance world, the break-even point is generally considered to be in the low 80s. So a 94% figure means for every 101 they collect in premiums, they're paying out 94 in claims. That doesn't even account for operating costs, so they're deep in the red.
And it's not just the result of 4 years of lowering premiums, right? There have been other structural problems piling up.
Exactly. The premium cuts are only part of the story. First, extreme weather has been a huge factor. Unprecedented heavy rains, heat waves. These things lead to more flooded and damaged cars, which means more insurance payouts.
Makes sense.
And second, you have these persistent structural issues like overtreatment for minor injuries from accidents, plus the rising cost of car parts and repairs themselves. The insurers are absorbing all of these rising costs.
And on top of that, the fourth quarter is typically worse for accidents due to seasonal factors. So it sounds like an annual deficit for the auto insurance sector is pretty much a done deal for the first time in 5 years.
It seems almost certain, but this is where that political dilemma you mentioned comes into play. The current administration has made stabilizing prices a top priority. If the number one player, Samsung Fire and Marine, raises its rates, you can bet the other insurers will follow suit.
And that directly hits household budgets.
It does. So this decision becomes less about economic logic and more about a very sensitive political calculation.
Interestingly, while Samsung Fire and Marine was struggling, Samsung Life Insurance actually did quite well over the same period. What was driving their strong performance?
Samsung Life had a great third quarter. Their net profit was up 7.3% year-on-year, hitting 723 billion won. The key driver here was the sale of health insurance policies. More specifically, their contractual service margin, or CSM, saw a huge increase. That's become a really critical metric under the new IFRS 17 accounting standards.
Okay, so CSM, contractual service margin. In simple terms, is that like a measure of the total profit an insurer expects to make from its existing policies in the future, like a pipeline of future earnings?
That's a perfect way to put it. It's their pool of future unearned profits. And Samsung Life's cumulative CSM from new health contracts was up nearly 24%, reaching over 1.75 trillion won. It shows their strategy of focusing on and strengthening their health insurance lineup is really paying off.
Now, another big variable for Samsung Life was the issue around their instant annuity products. The Supreme Court made a ruling, but they're still holding on to large provisions. Why the caution?
Right, so the Supreme Court recently ruled in favor of the insurers, saying they didn't have to make certain additional payouts. That was a big win. However, Samsung Life still has 3 other separate lawsuits related to instant annuities pending.
I see.
So because the legal risks aren't completely resolved, they're being very cautious. They're holding on to provisions of about 415.4 billion won rather than releasing that money back into profits. It's a conservative, prudent move until all the legal dust settles.
Okay, we've covered the dilemma in the insurance sector. Let's pivot now to savings banks. There's been a lot of concern about their financial health, so the news that their delinquency rate fell to below 7% for the first time in almost 2 years sounds, well, it sounds positive on the surface.
The headline number is definitely positive. The overall delinquency rate for the 79 savings banks was 6.9% at the end of the third quarter, down from 7.53%. But you really have to look at why it went down. It's not because the economy improved and borrowers are suddenly paying back their loans.
It's because the banks have been aggressively cleaning house, so to speak.
Exactly. You can think of it as the result of major surgery to remove a problem area. In the third quarter alone, the savings bank industry sold off or wrote off a staggering 1.7 trillion won worth of non-performing loans. They've been spending heavily to get these potential risks off their books and shore up their balance sheets.
And it's interesting, this effort brought down the delinquency rate for corporate loans, but the rate for household loans actually ticked up slightly. Is there a warning sign in there for us?
Yes, that's the crucial point. While the big real estate PF loan cleanup is managing institutional risk, it signals that the financial strain on ordinary people is not easing up. The rise in household loan delinquencies is proof that high interest rates and a delayed economic recovery are still squeezing people's ability to pay their debts.
So even though the banks reported a profit for the third consecutive quarter,
That's largely an accounting effect from having set aside huge loan loss provisions earlier. The actual operating environment is still very tough. It's going to take some time before they can really grow their profits through normal business expansion.
moving from balance sheet health to an issue of immediate investor safety, it's been discovered that a Chinese-affiliated crypto exchange, BTCC, has been operating illegally in the country, dodging regulators. This sounds incredibly risky.
It is. BTCC is already on the list of unregistered overseas exchanges, and access to its site is supposed to be blocked in Korea. But they are getting around this by slightly changing their app name to things like BTCC Lite and relisting it. And the most problematic part is that they are using fraudulent domestic personal bank accounts to accept deposits in Korean won.
Isn't that the exact kind of old school trick that the 2021 Financial Reporting Act, the Special Financial Transactions Act, was designed to stamp out? It might be worth reminding ourselves why that was banned so strictly.
You're absolutely right. This method, where an investor sends money not to the company's account, but to a personal bank account belonging to, say, an employee who then credits their crypto account, it was banned for two very clear reasons. First, it makes it impossible to trace the flow of funds, which opens the door wide to money laundering.
And second,
Second, and this is the direct risk to you as an investor, it creates an enormous risk that the exchange could misuse your funds or, even worse, just disappear with them. A classic rug pull.
and to avoid getting caught, they're constantly switching these accounts, using a so-called locust-style operation.
Yes, as soon as regulators block one account, they just open another one under a different name and carry on. It's a game of cat and mouse. What's shocking is that this primitive illegal method is making a comeback. It suggests that after a few years, regulatory fatigue might be setting in, creating loopholes for these bad actors to exploit. It's a major red flag for the regulators.
And we're already hearing from investors who have been harmed. Reports of everything from withdrawal delays to more serious losses are popping up in online chat rooms.
That's right. People are reporting that withdrawals are frozen for more than 24 hours, and in some cases, with larger amounts, they just never see their money again. With an unregistered exchange, you have no legal recourse in Korea. There's a strong call for regulators to crack down hard on these platforms immediately to protect investors.
All right, for our final topic, let's look at something more positive, a story of innovation. NH Nanghai Bank is launching a pilot project to process value-added tax, or VAT, refunds for foreign tourists using a won-backed stablecoin. This is significant because it demonstrates a real-world use case.
It is. This project is a really important attempt by the bank to find a killer app for blockchain technology. They want to completely automate the inefficient, paper-based process that tourists currently go through at the airport to get their VAT refunds.
So instead of filling out forms, they could get their refund instantly as a digital currency, a stablecoin, when they leave the country. This is also a test for more efficient cross-border payments, I assume.
Precisely. The refund information is stored securely on the blockchain, and the stablecoin can be issued and sent in real time. This could drastically cut down on airport wait times and administrative costs. And what's really notable is that NH Non-App is collaborating with global giants like Fireblocks, Avalanche, MasterCard, and WorldPay on this.
What makes this project stand out beyond just being a PEC demo?
The biggest takeaway is that it directly refutes the skepticism that there are no practical uses for a one-based stablecoin. Many critics have argued that stablecoins are just for speculation and offer no real advantage over the existing financial system.
Right.
But this VAT refund pilot is a perfect example. It shows that in areas like payments, refunds, and cross-border settlements, a stablecoin can be faster, cheaper, and more efficient. It's a huge step forward and showcases a vision for the digital transformation of Korea's tourism economy.
We've covered a lot today, from the political pressures on Samsung Fire and Marine's insurance rates and the difficult recovery of savings banks, to the dangerous tactics of illegal crypto exchanges, and finally the innovative future of fintech with stablecoins. We'll be back again soon with more fast, accurate, and in-depth news. This has been the Deep Dive from the Seoul Economic Daily. Thank you for listening.